Hello traders and welcome to another video review. Today is Tuesday, February 3rd, 2026. Let's take a look at the economic calendar for today. What do we have here? Asian session, not really important one this time. Interest rate decision in Australia has been made early during the early morning hours. The Reserve Bank of Australia hiked the interest rate from 3.60 to 3.85 as expected, so no surprise here. In the other news, building approvals down from 13 to minus 14.9. CPI in Turkey up from 0.89 to 4.84. We are waiting for the CPI data from France. We are waiting for the unemployment change data from the Spain. Sorry. During the US session, we got JOLTS job openings as the biggest and most important data release, scheduled for release, of course, at 4 o'clock. Global dairy trade price index on New Zealand is scheduled for release at 6. This is at 4 o'clock. At 10:30 we got API weekly crude oil stock. At 10:45 employment change, unemployment rate from the New Zealand, and at the end of the day at 11 o'clock we got AIG manufacturing index data from Australia. So really easy day for the traders. Interest rate decision has been made already, so we will take a look at the Australian dollar. So without any further ado, let's start with the chart, and we start with euro dollar as usual. So the euro dollar continues to move lower as expected. So now we got the confirmation that 5-wave impulsive structure towards 1.2082 had been completed at this level, and the current levels here will act as the technical resistance. For example, 1.1897 is the technical resistance, 1.1920 is the technical resistance, 1.1851 is technical resistance. And now the wave 4 went as low as the lows of the wave, wave C went as low as the previous wave 4 territory, but it even extended lower, and it looks like the market wants to hit the 100 periods moving average. Local low was made at 1.1777, 100 periods moving average is 1.1763, so only 15 pips higher. So this situation looks like a correction to the downside that might be completed. Bullish engulfing pattern at the level of 1.1777 into the almost extremely oversold conditions. Maybe this will be the first clue of the possible movement to the upside. However, we need to wait for a breakout above the level of this level should be, I guess, here. Looks more, yeah, there is a slight gap. There you go, 1.1837. Obviously, if we take a look at this situation here, we have a first wave of a cycle completed to the upside, so this 5 waves is now done, and ABC is the wave 2. So now we should see strong, dynamic, aggressive wave 3 to the upside that will develop in impulsive manner. If we won't see this on euro dollar, this scenario is either invalidated or wave 2 will eventually develop or progress into more complex in time and price, right? So we need to see here to see what is going on. Australian dollar after the interest rate decision. Let's take a look here. So sharp rebound from the levels of, let me just take a look, 6,700, 6,911 local low, and this level will be acting as the technical support. The other level is 6,904. There was a slight gap here. Now it is covered. and the market broke above this trend line. You can see the trend line here. Let me just show you. There should be some kind of a trend. I need to get rid of my magnet, and there should be some sort of the trend line. We have a breakout to the upside, and now we are going up towards the swing high, basically 7,097. That's the technical resistance. Momentum up from 41 to 62, strong positive momentum. Australian dollar gaining across the board. Let's take a look at the daily to see where it can go. Well, there is nothing on the left side, at least not in this year, not in the previous year. So it looks like the Australian dollar getting stronger. Look at this movement here. Look at this situation here. Correction, intraday decision, continuation. Very good pattern for the bulls. Australian dollar going higher. So if we talk about the Australian dollar, let's take a look at the New Zealand dollar. Almost the same situation here. Look, on a daily time frame chart, breakout from the descending channel down from 5,574. First leg to the upside, correction, second leg to the upside. If we take the Fibonacci based tool, this is the extension tool, and let's do it like that. So 161 is located here at this level. 6,152, that's the target level. It will be black. Just below it there is swing high. Let me just move my chart because I can't do it right now. There you go. There is a swing high, obviously, from this is, I guess, last year, yeah, 2025, July 1st, 6,115. And that's the target. So very nice target zone for this movement to the upside. Local high was made at 6,067. At least there is 20, 30, 50 pips more to be gained for the New Zealand. Nevertheless, we are trying to move lower, do some kind of a pullback from the extremely overbought conditions. But the situation here is very, very technical, and we might see continuation to the upside. The question is whether this is the wave A, B, and C, and the target for the wave C quite extended, or this is the beginning of the 1, 2, 3, 4, 5 wave 1, A, B, C, irregular flat wave 2, wave 3, wave 4, and wave and wave 5. We will see in the nearest future. For now, bullish outlook for the New Zealand dollar. Pound, not doing much, but this is daily, so maybe it's doing more for the 4 hour. There you go. In the 4 hour time frame chart, it looks like the wave 4 low is 1.3622. Now we broke, and now we're trying to move higher because we broke below the level of 50 on the RSI. We need to break back above the level of 50, and then the wave 5 might have a chance to develop. Otherwise, the wave 4 will be more complex and time consuming here on this chart. Local technical support 1.3622, potential low for the wave 4. US dollar versus the Japanese yen. Finally, yesterday it actually tested the gap. It covered the gap, filled the gap. Now, as you can see, we broke above the gap. That's very bullish. 155.80. The next target for the bulls is the 100 piece moving average on a 4 hour time frame chart, 156.59. There is some room to the upside as well. As you can see, we didn't hit the extremely overbought conditions just yet. We got some support here. We need to cover the gap very, very briefly, and then move higher. Move higher above the technical resistance towards the 100 piece moving average. And that's going to be a very, very interesting situation. For now, the outlook remains bullish, especially with this kind of the momentum. So the US dollar, the Japanese yen, bullish. Gold rebounding from the recent minus 21% slump. 4,924 is now the local high. We are moving up towards the level of 5,000 and then higher. We broke above the 100 piece moving average, and it looks like the market wants to go once more wants to go higher after this correction. So in the background, we had the uptrend that was starting showing multiple signs. Signs of the multiple divergence, bearish divergence. We got minus $21 correction. Now the market is ready to continue to move higher. Last but not least, let's take a look at the Bitcoin. The Bitcoin actually doesn't do much, to be honest. There is a bullish divergence. We went as high as the level of 43 on the RSI from the extremely oversold conditions. Nevertheless, we are still below the level of 80,000. That's pathetic. There is no force, no momentum, no bullish volume on the Bitcoin just yet. We got the bullish engulfing pattern at the end of this move to the towards the $75,000. Nevertheless, we can't even break above the level of 79,424, which is the local technical resistance, to at least to test the 80,000 and higher. The key technical resistance and the supply zone, as you can see, is located roughly around 85,000. This is this line of this this is that area. But it looks like the bulls are not interested in taking Bitcoin higher. So quite pathetic situation for the bulls. We are minus 40% from the all-time high. Maybe now we are minus 37% or something like this. That's still very, very big correction. Quite typical for the cryptocurrencies. Quite typical for the Bitcoin. It's seen 80%, 60% corrections before, so that's nothing new. Nevertheless, there is no sustained upward momentum, which means that might not be the low. The 74,604 might not be the low for the Bitcoin, might not. And we need a confirmation that this market will break above the $80,000 in order to see what is going on with this situation here on the Bitcoin. So for now, we are looking at the local technical resistance, 79,424. If this is violated, then we have the technical resistance, and then eventually this supply zone. So we will see how it's going, how the bulls are doing on the Bitcoin soon. And I guess that's everything from me for today. So thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.